morning. Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Monday, March 22nd, 2010. It's 11:30 a.m. Eastern Daylight Time in the U.S. We're still in that unusual gap for another week. In London, it's 3:30 p.m. They go to daylight savings time next weekend. 3:30 p.m. If you need to reach during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. And we have a busy news day today, so we'll get right to it. First story. Last night at about 11:30 p.m., the House of Representatives passed the health reform bill. It's heading toward President Obama's desk right now for signature. The United States has finally, or will soon, finally join the ranks of the industrialized country and have a mandatory universal health care system. The House voted 219 to 212 in order to pass the bill. It will extend coverage to 32 million uninsured Americans, reduce deficits, and ban insurance company practices such as denying coverage to people with pre-existing medical conditions. The Republicans in the House of Representatives were shameless in their defense of the American insurance industry. It was very clear whose side they were on. It was quite a scene to watch, actually. The president indicates that he's probably going to sign the bill tomorrow. Back to reinsurance news. Reinsurance broker Guy Carpenter has appointed Victoria Carter. Vicki Carter has been appointed to the role of Vice Chairman, International Operations. In her role as Vice Chairman of Carpenter International, she'll report to Henry Keeling. Carter, of course, is the first female founder of a Lloyd's intermediary. Most recently, she's been the Chairman of UK and International Operations at Towers Watson. News from Bloomington, Illinois, that State Farm is planning Myrna Re 2, a cat bond that will offer up to $700 million in protection against some of the insurer's earthquake risk in California. The initial size of the deal is set to be about $400 million. Myrna Re 2 Limited was incorporated in Bermuda on February 26th. The insurer's 3-year Myrna Re 1 deal is going to expire in June of this year. Myrna Re 2 is expected to be completed in April. This will make it the third deal this year after Swiss Re's Successor 10 and Hartford Fire's Foundation Re 3. They need some help in naming some of these, I think. Back to the loss estimates still emanating from Chile. Argo Group has come in now. They see their first quarter disaster losses coming in from anywhere from 25 million to 35 million U.S., mainly as a result of the February earthquake in Chile. They said that some of the losses will also stem from European windstorm Xynthia, as well as the winter storms across the U.S. An Allied World Assurance Company Holdings, AWAC, has also added theirs in. They say that they're anticipating a hit of between 55 million and 75 million from the Chilean earthquake and an additional 2 million as a result of Xynthia. Both estimates are pre-tax and net of reinsurance. Scott Carmilani, the CEO there, said that the estimated losses are well within our accepted risk tolerances and in line with our models so far. Hank Greenberg was in the news late Friday. He announced that he agreed to a staged sale of his AIG shares to a unit of the UBS Bank of Switzerland for up to $278 million. In a filing late Friday with the SEC, it was announced that his investment vehicle, Star International, would sell up to 10 million AIG shares to UBS Securities. The deal is split into 4 parts of 2.5 million shares apiece. The structure is known as a variable prepaid forward sale. It's designed to help Greenberg limit his exposure to volatility in AIG's share price. Star International has no risk at all if the shares fall below $31.22, but they'll only benefit if the shares go up to $46.83. UBS will pocket any gain if the shares trade above $46.83. Moody's has some very interesting news. They say that there's 2 interesting bits of news. They say that the share repurchases that have been practiced by reinsurers worldwide could increase vulnerability after the Chilean quake and the Xynthia windstorm. And they also have a couple of comments on the quality of data relating to the Chilean quake. They note, of course, that 16 global reinsurers have reported about $3.5 billion in pre-tax net losses. They say that from an earnings perspective, they conclude that Q1 2010 will be significantly reduced, but they believe that the losses are generally manageable. And then the report said, nevertheless, much uncertainty still remains around these loss estimates because most reinsurers appear to simply be taking educated guesses based on market share percentages of possible industry-wide insured losses. They say, in addition, ceding companies have been slow to provide solid loss estimates to reinsurers because the cedents remain circumspect about the true extent of damage, particularly in Chile. So even in the year 2010, we're having difficulty managing data. They also said that in light of the fairly large losses sustained so early in this year, they expect that reinsurers will take a hard look at deciding whether or not they're going to continue their announced share repurchase plans. Moody's notes that the 2010 hurricane season still remains to be navigated. Now here's a face from the past. The Financial Times is reporting today that Richard Fuld, the former chief executive at Lehman Brothers, will be facing a scathing congressional hearing into Lehman's collapse next month. He's kept out of the public eye since his 2008 hearing, which prompted a slew of protests right in the hearing room. He now faces another interrogation by the, I think it's going to be the House of Representatives, actually, Barney Frank's committee. The hearing is tentatively scheduled for April, and the report comes in the wake of a court-appointed examiner's report that highlighted Lehman's use of so-called Repo 105 transactions that improved Lehman's balance sheet by $50 billion each quarter by classifying temporary repurchase agreements as permanent asset sales. Mr. Fuld, of course, has denied any knowledge of the Repo 105 transactions. He, as the CEO, apparently had no clue that every quarter $50 billion worth of corporate liabilities were in fact being added as assets. It's going to be a very, very interesting hearing, and we're going to be watching it very attentively. The stock market in the U.S. is up 33 points, up on this doomsday. After the health care bill is passed, it's actually up. Go to a word from our sponsors. Bring up this picture. This is a picture, of course, of the USS Cole, the American destroyer escort that was nearly sunk in Yemen 10 years ago. Well, the American government is warning ships sailing off Yemen that they are now susceptible to attacks by Al-Qaeda. The U.S. Office of Naval Intelligence has posted a warning on its website today that says that ships in the Red Sea between Yemen and Djibouti and the Gulf of Aden along Yemen's coasts are at the greatest risk. The warning says information suggests that Al-Qaeda remains interested in maritime attacks in the Red Sea and the Gulf of Aden. Although it's unclear how they would proceed, they being Al-Qaeda, it may be similar in nature to the attacks against the Cole in 2000 and the MV Limburg in October of 2002, where a small boat laden with explosives was detonated. Yemen, of course, has been at the forefront of Western security concerns since a failed December attack on a U.S.-bound plane boosted security on its coast earlier this year to prevent fighters from reaching its shores from nearby Somalia to reinforce Al-Qaeda in Yemen. In Beijing, sandstorms are whipping across